Hey everyone. So I've been reading a book called Recession Proof Real Estate Investing. And I'm almost at the tail end of that book, believe it or not. And I might go ahead and just finish the book after this video. So here's the thing that I've already noticed when reading this book, and the investor in me continues to look for recession proof real estate even now. Well, the truth is that the best time for a buy and hold investor like me was during low interest rate times when housing price was the lowest. And truth be told, it was really during 2020 when housing prices would have been the most optimal to buy. There were a lot of deals on the market, some that I passed up and some that I just could not get because I was overbid multiple times. There wasn't 5 or 6 or 10 different investors. However, there were 2 or 3 that would always outbid me, especially on duplexes. I wasn't willing to pay the extra price for these duplexes. And so when I finally settled on a home, I actually got into a single family home instead of being outbidded on the duplex that I was more interested in. Luckily, I was able to cut the cost on a single family home by $5,000, and then I was able to get an extra $3,500 in renovations completed by the seller of the property. So essentially, I had made over $8,500 profit by cutting costs and by getting some work done on the home, right? So on top of that, when it came time to buy the home, I was told that I would be receiving a 3.1% interest rate. However, I felt in my heart that 3.1% was too high at the time. A lot of you might be laughing. But I saw something online. I knew nothing about interest rates at the time. But I saw something online that said 2.75% interest rates. So when I finally broke and I called another lender, because I didn't even know that that was a possible thing to do. I didn't know who to call, who to talk to. But when I finally called another lender, they offered me a 2.625% interest rate with no points, no nothing. There was a time where I was actually mad when a lender offered me points. Now, with the knowledge that I have, I wish I would have taken more points if I could afford it at the time. But honestly, I felt like I maxed out my buying power and that I wouldn't have had any money left over to buy points anyway. So I'm happy with lowering my interest rate from 3.1% to 2.625%. With that being said, not only did I save $8,500, but I also saved on my rate by more than a quarter of a point. With that, the cost of home ownership had been drastically cut for me. And in fact, I was saving a lot more money owning a home than I was renting. With that being said, at the time, we could have done that with duplexes, multifamily units, and so many other units. I was not in the Army at the time. I did not have the VA loan at my disposal, but I still could have afforded to do a FHA loan and get a duplex still. However, I did not. I've still never utilized a FHA loan, and now that I have a VA loan, I have yet to utilize that as well. So there's many strategies that I'm still interested in utilizing. However, in this current market, I am not willing to go ahead and get a 7% interest rate with prices that are $50,000 to $80,000 more expensive on the properties today, and an interest rate that is 3 times more expensive than it was just 3 years ago. Because of this, we are now at the tail end of the seller's market. And eventually, we'll be seeing cuts in prices, which will dictate that people are no longer buying homes. And I have been seeing cuts in prices. There have been several cuts in prices. However, there are still buyers who are greedy, and they are still looking to buy homes that are just way too expensive. So a price will cut, and cut until there is a buyer who is simply able to afford it and willing to go ahead and spend all their money on a property that is still overpriced. I'm talking about mortgages that cost well over $5,000 are still being bid on in the Columbus, Ohio market. Therefore, I know that the price was cut just enough for that buyer or seller, for that buyer to afford it. And it wasn't necessarily in their best interest to do that instead of waiting for the market conditions to lessen even more. Some people are even scared of interest rates going up ever so slightly in July, so they may feel the pressure to buy still now in June. June, July, August are typically the best months to buy real estate and the best time to sell if you're a seller, right? That's when prices are the highest, and that is also when buyers are looking to move when their children are out of school, they have time to renovate and things of that nature, right? Everybody's excited in the summertime. They're ready to throw these big parties for the July barbecues and everything else, and then some. So in order to understand the markets, you need to be prepared. You see, I'm not looking to buy properties on just the NMLS because I understand that you will not find a deal as an investor on the MLS. The only way to find a deal is to look for seller financing opportunities and opportunities where I can assume a mortgage. So the only deals that I'm looking at are deals where I can actually assume the loan at an interest rate that is well below what the market is giving right now. And in order to do that, you still need a whole lot of cash in order to buy a property that is still inflated with the market conditions currently. So if a property is worth 170, but is inflated at 250, the amount of cash that I would need to assume that loan is roughly $80,000. And that's before closing costs and everything else. Now, closing costs is typically cheaper on an assumable loan. However, it still exists, and you have to be ready for that. So to pay $80,000 cash for a home, I'm typically paying for that interest rate and for that and for the years of the mortgage that have already been paid off. Now, is it worth $80,000 cash and a tenant that might not pay? Well, you have to do the math and figure that out for yourself. When you have savings accounts that are issuing 4% returns right now, CDs that are issuing 5% returns right now, and a stock market that is heavily discounted. So again, you got to really understand what is going on in the market and how best to invest your money, park your money, and utilize your money during this time. Right now, it's still a seller's market. So if you have a home and you're looking to sell, you might be selling for $10,000 less, but that's better than $50,000 less. And I'm not saying that it will ever get to a point where you're selling for $50,000 less unless you've way overvalued your property. But I am saying that I am starting to see $10,000 price cuts, $20,000 price cuts, people just trying to see what they can get, what numbers they can get. And, every time I think that a number is good for a property, they should go lower. There's someone who's always willing to pay a bit more than I am. And so there are people with a lot of money who are just looking to utilize it. And I'm always looking for the best deal because I want to be ahead of the game, not just in the game. And so in order to be ahead of the game, I need to get a steal of a deal every single time. And because of that, I'm definitely going to be on the sidelines, because right now is honestly not the best time for investors to be buying real estate. But, you got to keep your eye on the market. You got to keep watching just to see if anything does shape up in the short term. But I definitely will see better opportunities in 2024 in December, because interest rates will probably be a lot lower than 7% in 2024 in December, and housing prices would have leveled off to a respectable price. All of the cuts to housing prices would have already been instilled in the market, and then we will start to see a little bit more auctions come alive from people who are just letting go of their homes, those who have lost their jobs and can no longer afford to be paying on them, and so on and so forth. By December, when everybody is worried about Christmas shopping and everything else. When we hop into January, January is going to be also another great time where people are low on funds. There's going to be houses for sale, and you can still enter the market and do your thing. And by February, everybody's investing in the stock market. Everyone is willing to celebrate their new home for the new year. They're not really looking to move. So if you see houses on the market during that time, there's probably going to be a little bit less competition and more stuff for you to grab. I love when it snows. Places like New York, places like Philadelphia, places like Columbus, Ohio, when it snows a little bit, you have less competition, less people wanting to go out, less people wanting to see properties. That's a great time for you to go out there and do your thing. If you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and Rumble. And I can't wait to see you in the next one. Peace.